Good day, ladies and gentlemen. So today I want to talk to you about the power of risk to reward ratio. You need to understand how risk to reward ratio works. Okay, so understanding this alone will give you confidence to enter trades. And something else I would like to point out is the fact that in forex trading there is no way you can completely eliminate losses. Okay, you cannot completely eliminate losses, so you need to think in terms of probabilities. All right, you need to think in terms of probabilities. Now that's where risk to reward ratio come into play. Okay, so basically most traders use a risk to reward ratio of 1 to 2 or 1 to 3. Definitely there are some strategies that go up to 1 to 5 risk to reward ratio, but it depends on whether or not you see the setup, because those kind of setups don't happen every time. Okay, right now I'm in a losing trade. You can see I'm losing about $16 right now while I'm trading, but it doesn't really matter to me because my risk management is on point. Something else I would like to quickly point out is the fact that when you're trading, do not risk more than 5% of your of your account balance on a single trade. Okay, do not risk more than 5% of your account balance on a single trade. Generally the numbers are supposed to be 1 to 5%, but if you are trading a very small account, definitely it doesn't make sense for you to be risking 1%. Let's say you are trading $100 and per trade you are risking $1. It's kind of small. Okay, that's the way I see it. Your risk tolerance is gonna be on your own table. It's left for you to decide. Some persons are aggressive when it comes to trading, while some persons are very conservative. But whatever category you fall under, just don't trade on a single trade. Don't risk more than 1 to 5% of your account balance. So it doesn't make sense for you to have $100 balance and then on a single trade you are losing $10. That means you risk 10%. It doesn't make sense. So you need to put that into consideration. All right, so if you use a risk to reward ratio of 1 to 2, all you need is to win 4 times out of 10. Okay, so you just need to be 40% accurate. All right, you just need to win 4 times out of 10. I'll give you an example. For those that don't know what risk to reward ratio means, it means how much you are willing to lose and how much you are willing to make as profits as your reward. Okay, so if you're risking $1, it implies you are willing to lose $1, while you are hoping to make $2. That's 1 to 2 risk to reward ratio. And if it's 1 to 3 risk to reward ratio, it implies that you are looking to risk or willing to risk $1, for example, while trying to make $3. Okay, so like I said, if it's 1 to 2 that you are using, it implies you only need to be correct 40% of the time. Imagine 40% of the time is all you need in order to actually make money with 1 to 2 risk to reward ratio. I'll prove it to you. Let's say you take 10 trades. Out of the 10 trades, you lose 6. Each time you lose, you are losing $1. So it implies if you lose 6 trades, you have lost $6. Okay, and each time you win $2. So if you win 4 trades, that's gonna be plus. That's 4 times 2 plus $8. Okay, so by the time you do your plus and minus, you lost $6 and you won $8. 8 minus 6 is gonna leave you with plus $2. Okay, so you only won 4 times and still you are good to go with a little bit of profit. That's how powerful this system is. And if you are dealing with 1 to 3 risk to reward ratio, if all the trades you are taking, you are always targeting 3 times what you risk. Like I said, you have to have a good strategy to always be targeting 3 times. And I advise people, even though you are targeting 3 times what you're risking, try to take partials, because nothing is completely guaranteed in the market. Okay, but very powerful strategies exist that can help you have an edge. Okay, so it implies that you only need to be accurate 30% of the time. So imagine, all you need is 30% accuracy. What do I mean by that? Out of 10 trades, you need to only win 3. Okay, so let's say for each trade you lose $1. For each trade you lose minus $1. Okay, it implies if you win, you are winning $3. Okay, so let's say you lose 7 times. If you lose 7 times out of 10, that is gonna be minus $7. Okay, that's minus $7. Whereas if you win 3 times, remember each time you win $3. So if you win 3 times, that's $9. 3 times 3, $9. So it's gonna be plus $9 when you win. So at the end of the day, you'll be left with a net profit of $2 because 9 minus 7 is going to give you plus 2. Okay, plus $2. So basically that's just the idea behind it. Think in terms of probabilities, and definitely you're going to have an edge in the market. Okay, so if you're a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.